This talk will be about employee ownership, and it's generally about employee ownership, and also about our journey in employee ownership. So I'm Alex, and I am CEO of Wise Investment. We're based in Chipping Norton, and we do investment management and wealth management, so in the finance sector. And hopefully all of you are here because you're interested to know a bit more about employee ownership. So there are lots of different types of employee ownership, and every business will be slightly different and how it works within their businesses, both in terms of how it's set up, but also how you run the business day to day. So, you know, I'll talk about what we've done at Wise Investment. And so we became employee owned just over 7 years ago. I've been in the business 20 years, so I've worked in the business both prior to it being employee owned and also afterwards, and became CEO 4 years ago, so after we'd become employee owned, and the business is 28 years old roughly. So we had quite a long period, 20 years of not being employee owned, and then became employee owned. So what is employee ownership? There are quite a lot of different ownership models in this sector. So you can have direct employee ownership, where all the employees become individual shareholders or own a majority of the shares in the business. Or you can have indirect employee ownership, which is usually via a trust. Now, I'm not an expert in all the different variations of how you can set up an employee ownership business. So if that's of interest, then I can point you in directions of lots of people that I know that are experts in that area. But at Wise Investment, we are employee owned via a trust model. So that's exactly the same way as John Lewis, which is a well-known company that most people will know are employee owned. So we're owned in exactly the same way as them. And for us, what happened was 7 years ago, 51% of the company was sold into the trust, so that there was a majority ownership by the trust immediately, and then a further 5% is bought each year by the trust to the original owners. So in about 3 years' time, 10 years after the original buyout, we'll be 100% employee owned. Sometimes people ask me, well, are cooperatives employee owned businesses? And they're not. They're owned by their customers, whereas employee owned businesses are owned by the people who work there. So it is slightly different. So we're not a cooperative. And the reason we became employee owned was because our original founder was thinking about succession planning for the business. And this is one of the common ways that employee ownership happens. Although sometimes it's done by setting up an employee-owned company from outset, there are also quite a lot of public service spin-outs. So from lots of care providers who were previously under the NHS have spun out into separate companies, employee-owned companies, and there are quite a few large ones of those as well. It's changing quite a lot. It's becoming more popular for people. I think it's becoming better known. So it used to be just a handful of really large companies that were employee owned, like John Lewis and Arup Engineers. But there's been quite a big growth in the SME sector over the last few years, and also sort of family businesses as well. So in the last couple of years, for example, Aardman Animations have moved to employee ownership. They're the people who make Wallace and Gromit, so you might know them. Riverford Organics, which you might know about as well, and Richer Sound, so they've all become employee owned in the last few years. And also locally, we thought we were the only ones that were employee owned for a while, but we've now got companies. So Reflight Company in Shipton under Wychwood became employee owned last year. And Torchbox, who are in Charlbury, they're a digital product agency, about 30 people there as well. I think about 100 people at Reflight. They both became employee owned last year as well. So there's more kind of local businesses becoming employee owned. So before I go on to tell you a bit about our journey, I've put the link on here. So there is an employee ownership association who are promoting employee ownership, and there's lots of really interesting information on their website. So please feel free to have a look on there. They've done quite a lot of research as well into the benefits of employee ownership. So there is clear benefit in terms of you get more employees are more engaged in the business, so you get better outcomes in terms of profit and client service and things like that, because people are really invested in the business, and employee-owned businesses tend to be more resilient as well. But there's quite a lot of information on the employee ownership website about that as well. And there are also some tax benefits for being an employee-owned company. I wouldn't suggest that should be the reason for becoming employee-owned, but it is there. And again, you would need to take advice on that if you're interested in employee ownership. But for example, employee-owned businesses, if they're set up in a qualifying way, then you can distribute $3,600 each year to staff as a tax-free profit share, so the staff aren't taxed on that amount. And there's also tax benefits to owners when they sell their companies into an EO trust. So that was a bit of background to employee ownership, and then I'm just going to go on and tell you a bit about our journey and from my perspective. So we were founded by Tony Yarrow in his basement in 1992. And he set the business up so that he could give personal service to his clients in the way that he wanted to. And then the business grew very steadily over the next 20 years or so. And it was only sort of 8, 9, 10 years ago that Tony then started thinking about succession planning. And he looked at lots of options. His son Hugh was also working in the business at that point, but both of them felt that employee ownership would be the right structure for us over the longer term. And quite often, either a business like ours in the finance sector would be passed on either to family, down the family, or in lots of cases it would be sold to a larger firm, and you would potentially lose the original culture of the business, and he didn't want that. So he had very strong reasons for setting the business up in the first place, and he wanted to make sure that could continue for the longer term, and that we could look after the clients in the way that we would like to, rather than being absorbed in a much larger firm where we would probably be told to change our processes and the way that we're working. And he also wanted to preserve the business for the long term, for the clients as well as for us. So for us, that's a very important factor, because actually for our clients, this means that we are here for the longer term, because going forward under the trust arrangement, 75% of the staff would have to vote in favour of a sale, and it's a one person, one vote. It doesn't matter what your role is within the business. So the likelihood is that we're going to survive in our current format for a long time. And because you might have heard John Lewis call their staff partners, and so do we. So we're all partners of the trust. And in many ways, we are run just like any other company. We've got a management team and a board. But I think the difference is that ultimately we're appointed by the trustees, who have the power to remove the management team if that they feel that we're not running the company for the benefit of the shareholders, which are the partners. And that's quite a powerful model in terms of who you're accountable for when you run a business. It has taken quite a lot of time to make sure that people understand what the employee ownership means and how we run the business, and actually that it is still run like a normal business with a management team who make decisions. So we laugh about having cushion gate in the first few months of us becoming employee owned, when someone queried why we bought new cushions for the sofa in the staff room, and we've since obviously talked about what does it mean, who makes the decisions, and not every single decision can go through every single person in the business. So we've spent quite a lot of time working on that and embedding what employee ownership means to us. And it's also important to know that people within employee ownership businesses, they don't feel like owners on day one. Nothing changes on the day that you become employee owned. You have to work really hard to engage everyone who works there, to explain what employee ownership is, really change the way that you're working, be more open in terms of your business planning and your financial status and things like that. So there is quite a lot of work even once you've become employee owned. And every year there is a big conference every year, so we send quite a large number of people to this conference every year, and they come back with loads of ideas about how other people are running their businesses and ideas that we can implement in ours. And I think that's a really good benefit from employee ownership. People are really engaged in the business. They think of it as theirs. They want to contribute to the future success of the business. Actually this year what we did is we've formed a working group from members of staff who have come up with loads of really good ideas of how we can improve the business going forward. And that's nothing to do with the management team. No, they've set that up themselves. They've come up with loads of ideas. So you get really engaged workforce who are really keen to move the business forward. And in terms of us as a business, it's been a really interesting journey. So I've been there 20 years. We started off with 6 members of staff. We now have a sort of group structure. We've got 55 people across the partnership, 35 people in Wise Investment, and we've grown hugely over that time. Obviously can't tell you whether that's entirely to do with the employee ownership or not, but it's definitely helping. And there is a lot of research to say that employee ownership businesses are more resilient and do grow at a faster pace than other forms of businesses. And I would say that employee ownership is not the answer for every business, but it is definitely something that people should consider and put it in the mix. The Employee Ownership Association are also doing quite a lot of work with business advisors and accountants to make sure that is one of the options that business owners hear about when they're considering what their plans are for their business going forward. So this is why I'm here, hopefully to spread the word a bit about employee ownership. And I would also say there's been today in the various talks, there's been some, there was a talk about millennials and Gen Z. And I think actually employee ownership for us has been a really attractive a sort of point when we've been recruiting, particularly for the younger generation as well. They do want to work for a business that has more purpose than maximising profits, and where they can actually give some input into the business. So we've found that really helped in our recruitment, and we have got quite a number of people in that category of millennials and Gen Z, and so far staying with us for the longer term. And also I think with the current, I didn't want to mention COVID-19, but in the current situation, obviously businesses have got to adapt and change the way that you're working. We've involved all our staff a lot in those decisions, and also our financials throughout the time that we've been employee owned, so they understand the business and that some of the decisions that we've had to make. So I think that can be really powerful in times like this where you have to make perhaps some drastic decisions.